What's happening, guys? Welcome to another edition of This Week in Crypto, our last of April. It's been, once again, a wild week full of lots and lots of gains, especially on the altcoin end. We can see here, I'll actually make it just a little bigger for you guys. We'll see here very clearly it was green across the board outside of just a few outliers like Pirate Chain and Celsius and a stable coin, which shouldn't even matter. But overall, I mean, we're looking at just a sea of green here. Matic had a massive week. Phantom had a massive week. XRP, and of course, Bitcoin had a mild rebound, right? It dropped to the 47Ks, right? And a lot of people were starting to call for a bear market, saying that the rally was over, and it was able to jump right back up above 55K toward the end of this week. And, you know, that really propelled altcoins to be able to do their thing and rebound very nicely themselves. Ethereum, as we all know, made another all-time high this week. It jumped all the way to 2794. And, you know, a lot of ETH-based projects in particular were able to really take advantage of that and have huge weeks. And we're going to try to go over quite a few different things here. Before we do, as always, I just want to remind everyone that we do not give investment advice on this channel. We are simply here to read what our data is letting us know about where markets have gone, both on the on-chain side and social side. So keep that in mind, and we will definitely be looking forward to taking some of your questions and researching a few of your projects that you want to know more about toward the end of this call. So we're going to definitely be focusing mostly on Bitcoin and Ethereum, as we always do on this call. We may touch on a few others and, of course, take questions at the end. What I want to start off with is actually show, you know, the stark contrast between Bitcoin and Ethereum right now in terms of their token circulation. More specifically, what their token circulation is doing compared to their overall market caps based on history. This model here, as many of you may be familiar with is a good reflection to see when we're getting a bullish divergence versus a bearish divergence in the markets based on the amount of unique tokens that are actually moving around on the network. And that's one of the key things, as we know, that propels prices upwards or downwards is how much utility they're getting, how many coins are actually being moved from one wallet to another, and not just wash trading. We're talking about the percent of individual coins of the total supply that are being moved. And that's what this model attempts to solve, essentially, is look at, okay, the market cap is X. We expect, on average, you know, the amount of token circulation to be here. If it's below there, like it is now for the second straight month, it's looking like it's going to be red for Bitcoin. That's basically signaling to us that we're not quite getting the amount of circulation right now that we should be in order to sustain these market cap levels. And as we saw at the close of March, we were at about 58.9K. We're currently actually back up to about 55, but as of a day ago, we were at 53.5. It's looking very likely that we're going to end below. So this red bar was correct. We're going to be closing more than likely with another red bar here. And that's a bearish sign for Bitcoin. This is, of course, only one signal, but I want to point this out because when we compare it to Ethereum's chart, it looks almost the complete opposite. And that really is a telling sign and kind of the story of April and why Ethereum has gained so much ground on Bitcoin. I think has a lot to do with the amount of circulation that's happening on the ETH network compared to the Bitcoin network. I think that altcoins have had a big run, and a lot of them look a lot like this chart for Ethereum, where it's just been a sea of bullish divergences in token circulation for basically the last year, basically immediately after Black Thursday, if not a month after, starting in May. That's when a lot of these coins really just started to take off in price. And it's no fluke because we have a lot of bullish divergences going on. Ethereum is just one of many examples here. So,
Yeah,
of course.
For
Yeah.
people that are unfamiliar with NVT in general, I think, Brian, you give a pretty good explanation. For people that are maybe more familiar with like traditional finance, NVT is supposed to be crypto's response to the price to earning ratio, or P2E ratio, right? So the idea is, okay, well, Bitcoin and generally cryptocurrencies don't have an earnings report, right? So instead of earnings, you supplant the earnings portion of the P2E ratio with the amount of value that is being transacted on the network on a daily basis, right? So very simply, the formula for NVT is the market cap of the coin divided by the amount of unique coins that are moving on the blockchain on a daily basis, which is sort of a surrogate for the amount of total value that is being transacted on the blockchain, right? If Bitcoin is supposed to be this means of payment, massive sort of remittance protocol, or in general sort of the digital money, then you would expect the NVT ratio to be positive as the price grows, right? Because that would suggest that the market cap is justified based on the amount of value that is being transacted or moved across the Bitcoin network. So what the NVT is currently showing, in a nutshell, in simple words, is that the overall activity on the Bitcoin network in terms of you and I and everybody else exchanging Bitcoin on the network are fairly low compared to its market cap, or compared to its total network or market valuation, right? This is why sometimes it can be very concerning when the amount of BTC sort of falls, and I think we've seen it over the last couple of weeks. The general sort of amount of on-chain activity, not just in terms of the transaction volume, or not just in terms of the amount of BTC that is moving between addresses, but also in terms of the total amount of addresses, unique addresses that are interacting with Bitcoin. We have seen the same thing. So I wrote about this a few days ago. But Brian, if you look at Bitcoin's daily active addresses, especially the rolling 24-hour active addresses, if you open that chart, what we're going to see is we're going to see a very sluggish week for both Bitcoin and Ethereum. But since we're talking about BTC, let's start there. We're going to be seeing a very sluggish week in terms of the on-chain activity and the amount of unique addresses that are sending or receiving BTC on a daily basis. So by my sort of very rudimentary calculations before this call, there have been only 10 days before today that since the start of the year, that there have been less than 1 million active addresses on the Bitcoin network overall on a daily basis. 3 of those happened in the last week. So it definitely seems to suggest that the total or overall activity on the Bitcoin network is starting to slow down a bit, is starting to lag behind its price action, and it's probably one of the reasons why we're seeing Bitcoin continue to range, right? Now, I will also mention that we are seeing a concerning divergence between Ethereum's price and its on-chain activity as well. I mean, I put it in the thumbnail of this video because I thought it was pretty concerning. But since we're talking about BTC in particular here, this is what we have been seeing. As far as sort of the very fundamental on-chain activity on BTC in the past couple of days, at least, this is nothing to say about mid to long-term price potential for BTC. But over the last week or two, there's definitely been a sort of decline in A, the amount of value being transacted on the Bitcoin blockchain, and B, the amount of addresses interacting with the BTC overall, compared to other coins as well. So take that with what you want. We've also seen I think this week, we have seen the lowest gap ever between the amount of addresses interacting with Bitcoin and the amount of addresses interacting with Ethereum. Now, keep in mind that gap is still like 600,000 or something. But this so far in the history of these two coins, this week has seen, there we go. So this is the comparison between daily active addresses for Ethereum versus daily active addresses for Bitcoin. And because Bitcoins, as you can see over the past couple of days and even weeks, we've seen this sort of decline in the amount of addresses interacting with BTC compared to Ethereum, which has kind of just been on the roll because of its price action. This week, we have seen the lowest ever gap between these two coins in terms of overall on-chain activity. So growing demand for Ethereum, sluggish demand for Bitcoin, which seems to sort of have become a self-fulfilling prophecy. Bitcoin is ranging in a very sort of trading in a very tight range over the past couple of days, while Ethereum's been doing its own thing.
Yeah, I think this is really telling. I mean, we even had a single day right here that suspiciously happened right after Bitcoin's, I think, 3 or 4 year high in daily active addresses. that's the day after is when it had probably about a 5-month low, which is very odd. And we really haven't reached those high, numbers that we were hitting in the prior month uh, ever since that huge 5-month low. And as the 5-month low in Bitcoin happened, that's when Ethereum's daily active addresses really started to boom, and it really signified the transfer of interest, I think, between the crowd jumping off of the bandwagon of Bitcoin and into Ethereum and some altcoins. And this one really tells it well. Looking at the last 3 years, seeing the minor fluctuations of Ethereum and Bitcoin being more on a gradual rise here, with kind of that dip as the price really dropped in late 2019 and FUD was kicking in. But overall, I mean, it's Ethereum's time to shine right now, and as Dino said, this is by far the closest gap we've seen between the two in terms of the amount of addresses interacting on each respective network.
For sure. And we're going to be getting into the Bitcoin dominance and Ethereum dominance in a minute here. I think Max wanted to talk a little bit about what we're seeing in terms of comparisons to 2017, just based on the dominance of the two coins. But since we're on the topic of Bitcoin, Brian, and since we have a lot of stuff to cover
Sure.
today, I just wanted to kind of show a few or tell about a few things that I do like about Bitcoin and a few things that concern me about Bitcoin in the short term. So let's start with the things I like, or I mean, things that could potentially be leaving me cautiously optimistic, right? So number one is the general sort of derivatives sentiment. In particular, I'm talking about the funding rate for both Bitcoin and Ethereum. So if you follow these streams, we've been talking or harping about Bitcoin's funding rate for basically the last 3 to 4 months. The funding rate is the fee paid by one side of the perpetual contract to the other. So essentially what that means is when you see these high funding rates, that means that on average, the Bitcoin longs are paying Bitcoin shorts and the derivatives market is bullish on average. And then when you see these sort of drop-offs or sort of a neutral funding rate, it suggests that the bullish bias is sort of gone as far as the derivatives market is concerned, and there's not a whole lot of confidence in the at least the short-term sort of price potential for BTC. So currently, over the last, or both currently and over the last 6 months. First of all, over the last 6 months, we have seen pretty much every spike in Bitcoin's price action, as well as every local top, coincide with a significant uptick in the amount of in the Bitcoin's funding rate, suggesting that as the price rallies, derivatives market goes crazy. They go over leverage long, and as a result, we see these massive liquidations every now and again. Currently, Bitcoin's funding rate, not just on BitMEX, but on Binance, Huobi, Kraken, and other exchanges, is fairly low, actually surprisingly low. I've seen a few people tweet about it when Bitcoin recovered a few days ago, that this is one of the very few rare occasions where both Bitcoin and Ethereum have been able to sort of record a significant rise without a particular spike in its funding rate, relatively low, right? So that suggests that there's not a sort of massive bullish bias in the on the derivative side of the market, but it also seems to suggest that the current rally, unlike the previous rallies, is more driven by spot market than derivatives, which is, I think, sort of an interesting tidbit to mention. So at the very least, we're not seeing this massive influx of over-leveraged longs and the market euphoria around Bitcoin, which obviously is because of its price. I'm not surprised that we're not seeing it, but in general, I think for Bitcoin's sustainability and for the sustainability of Bitcoin's potential rally, lower is better. It suggests that the market is sort of either undervaluing the coin, or at the very least is not overvaluing the coin. It is erring on the side of caution, and it's generally slightly panicking about its short-term potential, which is, it sucks for the short term, but it's usually a healthy thing for a coin to experience. And then, speaking of the sentiment towards Bitcoin, if you, Brian, go into graphs, and if we look at Bitcoin-related sentiment in particular, there we go. And you can zoom it in a little bit. This is a 2-year view, so maybe zoom into the last year of data, just so we see it a bit clearly where we are at the moment. And you can smooth it out lower, maybe almost all the way down. Yes, somewhere around there. I think that's good. All right, so what we're going to see now is we're going to see the average sentiment towards Bitcoin on crypto social media. So this is based on over 1,000 different crypto-specific social media channels that we track, and the hundreds and thousands of messages that we collect from these channels on a daily basis. So this particular chart, essentially what it shows is that these spikes in average or weighted social sentiment suggest that the crowd, the crypto community, is exceedingly bullish towards Bitcoin, and then on the other hand, when we see these drop-offs in Bitcoin's sentiment, it means that the crowd is on average fairly bearish. So Brian, I think you might be missing the last tick of data there. Maybe if you want me to share my screen, because I have it loaded up here.
Yeah. You're seeing something different?
Yeah, slightly.
Sure.
Yes. Let me just share my screen real quick so people can see. There we go. All right, so yeah, the last tick of data, sometimes you need to, there we go, you need to kind of zoom it out a bit. So both on the 12-hour interval and on the 1-day interval, you will see a relatively substantial drop today in the average sentiment towards Bitcoin. There we go, once again. So we have kind of seen the crowd become bullish once again after Bitcoin recovered. Given the fact that Bitcoin has been very, very lethargic compared to the rest of the market, and especially Ethereum, it's not surprising that the average sentiment of traders and the crypto community in general has once again veered into negative on average. So we have done several sort of backtests on this phenomenon. I share it every once in a while on these calls. Let me show you here as well. We've done several backtests on the idea of what happens to a coin's price action when it peaks in terms of social sentiment. So basically when the crowd is super euphoric about the coin, and then on the other hand, what happens to it when the social sentiment or crowd sentiment is very low. Unsurprisingly, at least to us, the results were fairly consistent, and they suggest that the average price of the coin tends to drop off in the 20 days after we hit sort of peak bullish sentiment, which is sort of local top for market euphoria. And then on the other hand, we see the sort of uptick in the price action of the coin after they hit peak bearish sentiment. Now, I wouldn't say that we're currently at a peak bearish sentiment, but I would suggest that the fact that we're moving back into a bearish territory suggests that the crowd is sort of given up on BTC at the moment a little bit. The derivatives market are also fairly low on BTC. So in general, Bitcoin is actually being fairly, I think, undervalued by both the community and the derivatives market at this point in time. It's not super aggressive or super notable, but it's something that I think if it continues to happen over the next couple of days, it could provide opportunity for more sustainable growth for BTC, right? So Brian, I'm gonna switch it back to your end.
Sure.
If you want to take over the screen. And I can talk about one other thing that I think is interesting for, okay, let me stop sharing. There we go, you got it.
Should be working now.
Okay, so I want to talk about one final thing that I think is interesting for Bitcoin in particular, or a thing that I, let's say, like about Bitcoin, and that is its 30-day MVRV. So everybody that watches these calls, I think, know about MVRV and how we like to use it. If you're new to the call, what MVRV is a on-chain metric that tries to calculate the average profit or the average loss of all addresses that have acquired Bitcoin or a specific coin within a certain time frame. So currently we're looking at the 30-day MVRV ratio for Bitcoin. If you want to even zoom out to the last year of data, Brian, so that people can see exactly where we are compared to a bit more of Bitcoin's price action. There we go. So currently we're at about okay, well, Bitcoin has actually been pumping as we've been talking, so good. When I looked at it a few hours ago, it was minus 3%. Now it's already up to minus 0.8%. What this suggests is that on average, all addresses that have acquired Bitcoin in the past 30 days are sort of break even on their initial investment at the moment. They're minus 0.84%, right? So the idea behind this metric, or how some on-chain analysts use it, is that the higher the MVRV is, the more unclaimed profits there are. And therefore, the more potential that there is for a spike in sell side pressure, for people to start taking their profits, claiming their bags, and sort of reducing their exposure, reducing their risk. The lower, on the other hand, that MVRV is, the more likely it is that a coin has a chance for recovery short term. So, Brian, actually, if you look at the last, let's look at the last 2 years of data, because I wrote about this, I think, in the last week's report. I thought it was quite interesting. There we go. It was quite interesting that Bitcoin's 30-day MVRV has a tendency to kind of flatten or bottom out around these minus 15% levels, which is exactly where it bottomed out, I think, like last week, right? So this is obviously what you're seeing in the middle of the chart is the coronavirus dump, which is a major outlier. And I think I always take it with a grain of salt, anything that happened with the coronavirus dump. But in general, it did suggest that we are massively undervalued, right? Even though it was such a short-lived drop in MVRV. But if we sort of take that as a black swan event that it really is, generally Bitcoin's 30-day MVRV ratio has at least shown a tendency to bottom out between minus 13 and minus 15% before we see a sort of short-term recovery. And this is exactly sort of the price, the support level at which it has bounced back this week. And it still sort of ways away from historical highs, even within this own bull cycle. So the 30-day MVRV ratio suggests that there is more room for price appreciation. Doesn't necessarily mean that it's going to happen, but it definitely suggests that short-term holders, at least, currently aren't really experiencing massive gains that would prompt them or incentivize them to sell their bags, essentially, right? So these are some of the things that I like for Bitcoin. There are a few things that are not really necessarily great. So Brian, I know you also maybe wanted to talk about whales. So I don't know if you have them prepared.
I think I've got the absolute values for millionaires that would make a good topic here.
Right. Exactly. So it's funny, your charts look always a bit different than mine. I think it's because you use bars and I use lines. You mind if I share my end as well for this one? Yeah, just so. And by the way, you're getting some nice compliments there on the. I mean, I think it's a compliment in the chat. Somebody said, anyone else thinks that Brian looks like Mark Normand? I don't know who that is, but I'm gonna Google it. I'm gonna Google it now while I'm sharing my screen.
Okay. It's a compliment.
Mark Normand. Here we go. Prepare for this. Oh, yeah, I can see it. He's an American stand-up comedian and actor. I can definitely see it. Yeah.
I'll take it. He looks like a normal person.
Has a bit of yeah. You got that hair. Yeah, especially here. Look at this. Are you actually Mark Normand in disguise, Brian?
That's actually me, guys. I did not intend for you guys to find out this way.
All right, ladies and gentlemen, we got him. All right. All right, so this is what I wanted to show you. See, because I use the lines, it's a bit, I think, clear or a bit more easier to spot. So these are the two groups, as far as Bitcoin whales are concerned, guys. These are the two sort of groups of holders that I usually pay attention to. So what we're looking at right now is the total combined balance or the total combined holdings of all addresses that hold between 100 and 1,000 Bitcoin and 1,000 to 10,000 Bitcoin combined. So it's basically these two groups of holders, but we combine their total holdings into a single chart so that you can see how their holdings correlate or coincide with Bitcoin's price action over time. So I'm going to zoom out to the last 6 months. In general, I think the trend has been upward, right, for a while now. I think even basically since the start of the rally, the amount of Bitcoin held by these addresses has exploded. And I think that sort of validates this idea that the 2021 rally has been largely sort of propped up by institutional interest and institutional investors. However, let's zoom in a bit and see what's going on right now. So first of all, if we zoom in, we can definitely see that, and I mentioned this every week, we can definitely see interesting patterns, not necessarily clear cut, but definitely see that, you know, there are periods where these two groups of holders combined start to offload their bags when we see, you know, periods of short-term corrections and consolidations for Bitcoin's price action. And then we see certain sort of buy the dip events as well in their holdings. Like, for example, they dropped about 50,000 Bitcoin right on the May 14th price stop, before we saw Bitcoin correct. And then we had another sort of massive drop-off in their collective holdings before Bitcoin's April 14th the top. And this is, by the way, the total, the percentage of total supply that these addresses hold, percentage of Bitcoin's total supply. So it's about 48.6% of Bitcoin's total supply, essentially almost half, right? Now, I can also show exactly what that is in terms of raw numbers. So let's look at the last 15 days of data, right? So in the last 2.5 weeks, the total amount of Bitcoin held by these addresses, these millionaire addresses, right, go from 9.17 million to 9.1 million. So that's 70,000 Bitcoin that has been offloaded, or the combined balance of these addresses has shrunk by 70,000 Bitcoin. This doesn't obviously necessarily need to mean that these have all gone to exchanges and this is all sort of increased sell side pressure. But a move is a move, and it's definitely at least notable to see that the collective holdings of large Bitcoin addresses are in a decline. And they're not seeming to pick up, at least for the time being. There seems to have maybe been a little bit of a dip sort of accumulation here as Bitcoin's corrected. But since then, we're seeing sort of another sort of drop down. So personally, obviously no financial advice. Personally, I like to look at this group and I like to see these two entities or sort of entity groups start to accumulate once again before I can be a bit more confident in Bitcoin's short-term price action. So there are some positive signals, but on the other hand, the general sort of inertia by Bitcoin whales, at least according to on-chain data, is still concerning a bit to me. So I'm gonna end it there, Brian, and you can take over. Sorry, Mark, and you can take over your screen again.
Will do.
Oh, so somebody says that they can't hear. The volume is so low. Let me know if. Oh, okay, it's fine. Check the volume on your side. All right, I can yell louder if you guys need me to, but yeah, just let me know.
You're definitely coming in fine on my side.
Okay, cool.
So to jump back to MVRV really quick, I wanted to make another point, not just about Bitcoin, Ethereum, but about many altcoins in general. As you can see here, there are many green bars that are essentially jumping between underbought, overbought. Essentially, we're seeing that there's kind of a little bit of a mix between all of the altcoins right now. I might even say that some of these are inaccurate, so I'm going to leave them alone and only talk about Bitcoin, Ethereum, which I know are accurate. Bitcoin is showing right now as semi overbought, which means that on the 1 day, 7 day, 6 month, and 1 year MVRVs, meaning the average investors who started that time interval ago, they've all made on average a lot of return, and that is why we have a semi overbought signal. For Ethereum, as you may expect, when something surges the way Ethereum has over the last month, it actually just passed the overbought line. So every MVRV except for the 1 day, because there's been a very mild retrace over the last 1 day, they're all showing as very overbought because of the fact that average trader returns over these intervals are all through the roof for traders who invested over that period of time. It's something to keep in mind, and this model is also available to our sand-based pro traders, just like the NVT one, and it'll tell you when it's time to be concerned when something crosses the danger zone, or alternatively when it's in the underbought zone, where I think there may be some inaccuracies on those levels. But Bitcoin, Ethereum for sure are reflective in an accurate way, and you can gather a lot of information between the two just by looking at this chart. So that's all I want to say on that. I'll also point out really quickly what's going on with the 100,000 plus category, or actually I should say the gold line here is 1,000 or more Bitcoin held in an address. So the amount of addresses with 1,000 or more right now was at, well, right now it's at 2232, But note that way up here, it peaked at about 24.89. So it's continuing to stay low. And you can also note that the mid-tier holders, the ones that have 10 to 1,000 Bitcoin in them, which is still a ton, that's anywhere between 500,000 all the way up to about 50 million. Yeah, I've got that right. 500,000 to 50 million. They've continued to profit take, and we're sitting at pretty much 6-month lows here as it continues to fall. While the smaller addresses continue to rise here, you'll notice that the 0.1 versus 10 is actually seeing its biggest drop right now in the amount of addresses since back in mid to early March. So it's been about 6 weeks since we saw this kind of drop. It'll be interesting to see what comes of it. With the last few drops when they've happened, we actually did see the price kind of top off temporarily, even here and here. That was the case. So just something to keep in mind. Looking at the Ethereum side as well, we're seeing a similar picture with the red line. In this case, it's the 100 to 10,000 coin addresses continuing to drop off down to about 44,100 when it was all the way up at 53,100 back in November. So that's interesting to see. But the gold line, if you're wondering what kind of things have been able to push Ethereum toward its all-time high, look no further than the amount of whale addresses that have been created since April 9th. We were at 1245 just about 3 weeks ago to the day 3 weeks ago. And now we're at 1308. And that's a massive percent change boost. I won't do the mental math right now, but I can tell you that going from 1245 addresses with 10,000 plus all the way to 1308 in a matter of 3 weeks is very significant. And it's stayed high even after the all-time high a few days ago. We're continuing to see the gold line here very close to what was an all-time high of 1311 just last week. So this is another great chart to keep an eye on. Obviously, you'll always see the pink and tan lines, the small addresses, continuing to rise, but you did see a little bit of a drop off here in the pink one as well. That's not nearly as significant. When I'm looking at the supply distributions, I'm mostly looking at what the gold line is doing here. So keep that in mind. I think right now, Dino, we could probably transition to, actually one more thing on the Ethereum side, gas fees. We are staying very close to what is about a 3-month low in average fees. It hit its 3-month low just about 5 days ago, where the average fees got all the way down to $8.43 after just a few days before being at $30.42. That is a significant drop. And we jumped back up a little as the all-time high was approaching, and then came right back down yesterday, back to about 837. This is a good thing, right? We don't want fees to be excessive, because in the long term, when you see something like this for a sustained period of time, and then this huge spike here that was, I believe, an all-time high of 37.60 as the average fee for that day, that coincided with this huge drop at the time, going from 2,000 all the way back down to inevitably, I think it actually got, under 1,400. So seeing that it's staying relatively low compared to what it's been looking like for the last 3 months is an encouraging sign, as it ensures that traders and holders of Ethereum are not feeling restricted by the fact that any move they make is going to be extremely expensive.
Right. I think one last thing that we want to talk about when it comes to Ethereum, I think it would be a shame not to mention it, is its social metrics, which are looking fairly concerning. So I don't want to sort of leave. By the way, guys, obviously we're gonna start taking questions from chat. What coins do you want us to look into? What coins are you currently? I mean, it's looking like mini altcoin season. So I'm sure that everybody in chat has a coin that they're either looking to dump or they're looking to maybe get into. So if you want us to do some impromptu analysis, especially if it's an ERC20 coin, because obviously we have a lot of data on those, on-chain data in particular, let us know in chat, and then Max is going to create a poll based on the most popular coins, and we'll get to at least two, hopefully three coins after the Ethereum sort of Ethereum demonstration here. So Brian, yeah, there we go. So actually, before that, can we look at just the social volume for Ethereum? I think it's also interesting. So this is one thing that this is how I'm looking at Ethereum right now, as far as why it's pumping and where we might see it go next. So this is the social volume for Ethereum. Essentially, social volume for Ethereum means that we're looking at the total amount of Ethereum-related mentions on crypto social media over the last, this is what, 6 months, right? No, actually, this is the last year. So essentially, over the last couple of days, we have seen it, and even a week, we have seen several significant spikes in Ethereum social volume. And you can kind of see that each of those spikes has coincided with the local top for Ethereum as well, right? So that one on April 22nd, and then the one before, I think it was like April 19th or something, April 15th, there we go. And so now we're also seeing another big spike in social volume. So basically, and this is something that, I mean, we talk about in every call, based on our backtest as well. Strong spikes in the social volume suggest that, peak euphoria, especially when they happen during a rally. It suggests that the crowd is becoming hyper aware of the pump, and everybody that wanted to get into the pump is probably already there. So there's going to be a lack of buy side pressure moving forward, right? And in general, it suggests overvalued conditions. And now if we go to the sentiment for Ethereum, so these were just the amount of mentions towards Ethereum, which are very high, which might be concerning for its short-term price action. And then when we look at its sentiment, or the average mood of these mentions, I think this is a very cool chart. So here we're looking at, especially if you look at the last 2 weeks of data, right? You're looking at 3 spikes in social sentiment. You have spike number 1 around Ethereum's new all-time high on April 16th, basically suggesting the crowd is going wild about Ethereum, very bullish. Bam, we go down almost immediately. We go back to bearish sentiment on average. We have another spike. We have an immediate uptick in bullish sentiment towards Ethereum, suggesting that the crowd is once again hyping it up because it broke another all-time high. The price drops, we go once again into bearish territory, and then with Ethereum's latest sort of move into price discovery, we are seeing the biggest of the 3 spikes in social sentiment. So big spike in social sentiment, big spike in social volume suggests that the crowd is becoming very, very excited and euphoric about Ethereum. This is usually not a great sign for its short-term price action, at the very least. I'm not saying that, it can't sustainably break 3K in next week or 2 weeks or whatever. I am, however, saying that based on historical precedents, these types of elevated social metrics and social activity suggest that we are at an increased risk of a short-term correction, right? It seems like we are very much getting to this overvalued period of the market. So keep that in mind and keep an eye on both social sentiment and social volume for Ethereum, because I think that's what's sort of going to make or break the coin, especially because, and Brian, if you go back to the active addresses for Ethereum, especially the rolling 24-hour active addresses, what you're going to see is you're going to see over the last couple of days a decline in demand for Ethereum, at least in terms of the amount of addresses interacting with ETH, right? Sending or receiving ETH. So there we go, last couple of days. So this is also a concerning divergence. So we're seeing the sort of crowd start hyping up the coin, suggesting, it's going to go to the moon, it's going to break 3K or whatever. At the same time, however, we are seeing over the last couple of days a sluggish amount of activity on the network. So sluggish activity, hyper euphoric crowd, usually or sometimes not a great combination of factors. So I would definitely consider this a potentially bearish divergence for the short term. Not definitely, just maybe. So, something to keep in mind. So we've got a poll coming out. Before we go to the poll, Brian, can I share my screen and show a few things that we've been working on recently?
Please do.
All right, cool. So first I want to start with SANR. So obviously, we talk about it on these calls every week. SANR, a platform that we've built over the past couple of months. It's the world's first decentralized marketplace for crypto price signals. So essentially, what you can do here is, if you have an idea of where you think the market is going to be headed next, you can create a signal or a price forecast for a specific coin. You can set specific advanced metrics like target price and set a stop loss order. And every prediction that you make gets recorded on the blockchain as an NFT. It's one of the coolest things I think about this platform is that it allows people to see your full prediction history without having to be skeptical about it, without having to worry whether you've deleted some signals, whether your full sort of market reputation is really out there, transparent, or if you've hidden part of it. So currently, these are the 3 signals that I have opened. This is I called it impromptu quants. This is our sort of test wallet, test address that I've been using for these weekly streams. We have made 3 sort of forecasts. This is, I think, a forecast that I made 2 weeks ago on this call. We're just sort of moving back to Bitcoin being up. Uniswap is what we made last week on this call. I wasn't even super bullish on Uniswap, but based on some of the metrics we saw, I thought there were more sort of positive notes than negative. So we just wanted to make a single prediction last week. So we made it for Uniswap. Luckily, it came true. I think it went as high as plus 25%. Currently, it's already kind of fizzled out a bit. And then for Ethereum, it's another sort of prediction that we made mid this week. We're plus 30% on it. So if you guys want to sort of compete against both us, the Santiment team members, and other community members, check out SANR, sanr.santiment.net. It's a very cool platform for you to not just sort of train your sense of the market, but also see what other people are saying and find people and users with a fully transparent forecast history or price forecast history. With if you find people that have, let's say, 70 closed forecasts and their performance is like plus 200%, you can be sure that these are all of the forecasts that I have made so far. And if you believe that they have kind of, in your eyes, proven that they have a strong pulse of the market, you can follow those accounts so that in the future you get notified when they create another signal and maybe front run the market with them. So just to sort of demonstrate once again how this platform works, what we're going to do, let's say that obviously, this is not financial advice. We're just demonstrating how the platform works. Let's say because of these sort of elevated social levels and also MVRV for Ethereum, which we didn't even touch on, is pretty high at the moment. Let's say we think that there might be a potential for short-term price correction. Not even maybe just a few days, but at the moment, at least, it seems like there's a little bit of an overvalued sort of vibe around Ethereum. So we can create a sunset signal suggesting that the price is going to fall, and we're also going to enter this forecast in the oh wait, I have it right. Let's see. I want. Right. Okay. One sec. So I want to create a prediction that is going to be integrated into a bi-weekly reward pool so that we can...
basically, it's the way that it shows up in the leaderboard.
There we go. So these predictions that we made, they do get recorded on the blockchain, but because we haven't entered it into a reward program, in order to do so, you need to stake 50 SAN. They aren't showing up on the leaderboard. So let's, try playing the leaderboard a little bit. This impromptu quants is the name that's going to show up here if we're decent enough. So we open the forecast. Let's sign the message.
How did you call it? Impromptu quant?
Yeah, impromptu quants. It's basically like very
nice name.
It's a very quick analysis where obviously, there's more metrics that we can look into. It's just something that we do on these weekly calls where we don't go over every single metric, but just a few key indicators that we think about on a daily basis. And based on that, let's say maybe Ethereum has more likelihood to drop in the short term, next couple of days, than rise. So we've opened the forecast, and now we're going to see how we fare against other people on the market and on this platform. If you want to play along, SANR.santiment.net, and let's see who gets the better of who by next week, right? All right, so there we go. One last thing before we get into questions, guys. We have sort of created a new, it's something that we're very excited about. We've created a new platform to help us and the community bring more transparency to the market. So as a market intelligence platform that we are, we're always working on improving our address labeling efforts, and in general, sort of the ways that we discover and track and label and tag key stakeholders on the market. But there's only so much that we can do in terms of machine learning and data science, right? There's only so much that code can help us in discovering which addresses belong to which stakeholders. So there's no really alternative to human community-driven research. So what we've built, and this is something that we've been working on over the last 2 months, we've built a decentralized platform, essentially a DApp, for crowdsourcing market intelligence. The way that it works is very simple. There are 2 roles on this platform. You can check it out on hunters.santiment.net. There are hunters and there are sheriffs. Hunters are people that can create proposals to basically provide insights on which addresses belong to a particular entity. So for example, if you know addresses that belong to specific smart money whales, or they belong to a specific project ecosystem like Uniswap treasury addresses, you can create proposals for those addresses to label them as such. And then other community members that know about the market and in general sort of understand and have a specific experience about address labeling can vote on your proposals, and if they pass, you get rewarded in SAN tokens. And also people that vote for proposals that get accepted and successfully submitted can also get rewarded for their role in the governance. So the reason why we decided to build this platform is very simple. We want to up our game as far as address labeling is concerned. We also want to in the future expand this platform to other tasks and other proposals and other sort of venues, not just address labeling, but maybe new social media channels, a lot of different things that we can do with it. But sort of for the time being, the main idea is to help us and the community in general figure out what are the key stakeholders and who these addresses belong to. So we're starting with sort of treasury addresses for large dApps, DEXs. We're starting with some smart money whales. So if you have an idea of specific addresses that you think might be useful for the community and for us as well, so that we can label them within our system, you can create proposals for them, submit what you believe these addresses, who they belong to, and then other community members can vote on your submissions, and both of you get rewarded. So it's a sort of a first attempt of ours to make a decentralized platform for crowdsourcing market intelligence and market research. If you think you know something about the crypto market and you think you can help both us and the community in general understand a bit more about where who the power brokers are on the market, I think this is a very cool sort of side platform that we have developed, and I strongly urge you to check it out. We're going to be talking about it more over the next couple of weeks, but just sort of as an introduction to the platform, SAN Hunters, hunters.santiment.net, check it out. All right. I think we're good, right? Can we start looking at the specific coins? Max, what do the people want? What are the coins with the biggest amount of votes?
I'm seeing AMPL 4th, Polkadot, ALCX as our top 3.
Okay. Okay, so let's, Polkadot, obviously, I got my parody shirt on, by the way. So, we can talk about Polkadot all day. But Polkadot is not an Ethereum-based coin, obviously. So we're not going to be able to spend a whole lot of time on on-chain data because we're currently not covering Polkadot in terms of on-chain activity. So because of that, we can sort of look at a few additional sort of metrics like social volume and development activity. But for the time being, at least, we are working on integrating a few other blockchains, hash, something's in the pipeline. not necessarily for Polkadot, but yeah, let's at least check out what's going on as far as metrics that we do have for Polkadot. So let's look at social volume. There seems to be a big outlier spike here. So these are the amount of mentions of DOT or Polkadot on crypto social media over time. It doesn't seem like, there's any sort of significant uptick in it. I mean, I would love to see what on-chain data is showing as well, because we do see sort of several several spikes in social volume for DOT around local tops here, sort of along the way before we see short-term corrections. I'm not sure what this is. This is probably either some sort of an outlier in our data, or there was something very big announced here on DOT. March 16th, Polkadot. Can't remember any sort of major event being. So it could just be something that our algorithm picked up, which kind of skews the data a little bit. But overall, it doesn't seem there's a significant amount of additional chatter or talk about DOT. It's basically just low or neutral. It's flat, suggesting that compared to its historical data, there's not a whole lot of new interest in DOT, which is usually good. I mean, like I said, like I pointed for Ethereum right now, these massive spikes in social volume, massive spikes in chatter, all they are saying is there's more people talking about your coin, there's more euphoria around the coin, and more sort of opportunity and incentive for whales to dump on you. You know, even though they were not really seeing a whole lot of activity or elevated activity, I don't think that's necessarily a bad thing for DOT. As far as another metric that we do have for Polkadot, development activity, is a metric that essentially tries to calculate the total amount of resources that have been spent on investing in development of a project. So the way that we calculate this metric is we look at the public GitHub repositories for over 2,000 different projects, and we only focus on code-related events. So, you know, things like stars and comments on code are excluded from this data. Only commits and commit-related events within GitHub are included. And as a result, what you're seeing is the total monthly or daily amount of activity on public repositories of different cryptocurrency projects. Now, this is not a metric that is going to tell you whether a coin is going to pump or dump in a short term, but I think it's a very undervalued indicator when it comes to long-term due diligence, right? What you want to see in a coin and in a project in general is a coin or a project whose developers are committed to pushing code, polishing the product, working on the platform, throughout its life cycle. Doesn't matter what the coin's price is doing. You want to see something similar to what you're seeing for DOT, essentially. So this is obviously New Year's between December 23rd and January 7th. So this was probably a holiday for a lot of developers, and that's why you're seeing this sort of big drop. But since then, the development activity for Polkadot has been rising, and in general, I think it's pretty high. If we look at, let's see where it ranks among all of the coins that we have on the platform. I'm actually quite curious. Within the last 30 days, I want to see where does Polkadot land among all of the projects that we currently track as far as development activity is concerned. Because usually like the top two are like Cardano and Ethereum. So we can filter out all of the coins on our platform by the 30-day development activity, and let's see what we get. Actually, number 2. There we go. Cardano and Ethereum are actually 3 and 4. Kusama and Polkadot, according to our data, have been pushing the most code over the last 30 days. So relative to the rest of the market. Now, obviously, there are some drawbacks to this metric. Like not all of the projects have public repositories, right? So it's not like this metric is an end-all be-all as far as development activity is concerned, but I think it's a pretty good gauge at where a particular project stands compared to the rest of the market as far as development activity is concerned. All the development activity means is that the project is not an exit scam. It's investing substantial resources in its short-term development and short-term coding manpower. Therefore, there's sort of increased likelihood that we are going to see sort of major polishes to the platform, possibly new features, and in general, the project is staying true to its roadmap. So even though I don't think in the short term that's going to tell you whether the price is going to rise or fall, in the long term, you want to see coins or projects like Polkadot with excessively high development activity, because it means that they're sticking to their guns and they're working on upgrading and improving the product. And at the end of the day, that's all you can ask for. Like there are going to be projects that see these supernovas in a week or two and then they fall into oblivion. Developers of Polkadot are obviously in it for the long run. All right, I heard AMPL second. Is that true, Brian?
Correct.
Okay. So AMPL we get this every week. It's quite interesting. Let's see what AMPL is looking like. So I want to start by looking at general active addresses for AMPL. Obviously, algorithmic stable coins kind of a weird one to analyze. You can't really analyze them the same way that you're analyzing the rest of the coins and the rest of the cryptocurrencies. But let's see where we are. So on average, we are seeing sort of a slight uptick in the amount of unique addresses interacting with AMPL. I think here and here. So let me zoom in. These sort of spikes are probably not organic spikes. Like there's not sort of an influx of new users all of a sudden for AMPL. I would expect, yeah, there we go. I would expect that there's also a significant spike in daily deposits. Basically, addresses that are used to deposit AMPL to exchanges. So, when you see spikes in sort of on-chain activity in terms of daily active addresses, you don't always take it at face value. You need to make sure that they're not necessarily showing that more people are just using this coin to dump it rather than anything else, right? So this sort of spike in daily active addresses is probably prompted by the uptick in price and a lot of people moving the coin to exchanges, and that's why you sort of see this major drop off in its price action. But overall, I mean, the overall on-chain activity for AMPL remains at about 400 addresses, which I think is pretty good. That probably puts AMPL in the top 50, 60 coins on the Ethereum blockchain. I mean, we can check exactly where it is. But I think, anything in general, I think anything above like 100 to 200 daily active addresses is actually a coin that you can do some analysis on, and you can consider it not a complete shitcoin, right? I mean, obviously it's not as easy as that. There are a bunch of other sort of fundamentals to keep in mind, but at the very least, it suggests that there's an interest, like a sustainable interest in the coin. There are people that are on a daily basis actually interacting with it. So if we look at Ethereum, I have a few filters here already. So, okay, I have daily active addresses. So let's look at Ethereum and let's say, show me all of the Ethereum coins that have more than 200 daily active addresses on average in the past 7 days. So how many of the coins do we have here? We have actually quite a few. Interesting. I thought it would be less. Probably because of the market. A lot of people. Let's see. Did I do this right? Yeah. Wow. I'm actually quite impressed. So there's 1,000 different coins with daily active addresses of at least 200 in the last 7 days. What about the last month? Yeah, there we go. So that's more like it, 170. I guess in the past 7 days in particular, because of the alts pump, there have been a lot of coins with people looking to take advantage of the rallies and looking for the new Ethereum, looking for the new sort of low cap, high liquidity coins that can pump to 10, 20 X's. So there's actually quite a few coins right now with relatively high activity on their blockchains. So let's say 500 daily active addresses. I'm curious how many coins there are. Just 80. Okay. So I guess 500 is the new 100 for this rally. There's a lot of coins that are actually experiencing some uptick in their on-chain activity. Good to see. I mean, it may suggest that this whole sort of altcoin pump is not purely without any fundamental support. Overall, I think in general, ample force on-chain activity is looking fine. Obviously, it's going to pump, rise alongside its price action, but it seems like it's sort of stabilizing around the 400 to 500 level, which is pretty good. You ideally want to see it sort of be on an upward trajectory because it suggests that the coin is being used more, and in general, there's more demand for it. But 400, I can't complain about that. Let's look at its social volume. Okay, yeah, something that you often see, and this is why I talked about Ethereum and its spikes in social volume being concerning. You see Ampleforth like being massively talked about right as the price starts to boom. We've in the past couple of days we've like fallen back down to earth, and once again we've normalized in terms of Ampleforth related mentions on crypto social media, and this is usually where we want to be. This is a 3-hour interval. So it's good that we're seeing sort of a decline in general amount of interest for the coin. You don't want a coin that's being talked about too much. You kind of want it to be sort of a hidden gem and falling under the radar for the time being. So it's good to see that the amount of mentions of Ampleforth are starting to normalize. So as far as the exchange inflow, it's also normalizing. I think I mentioned it last week, right? Somebody asked me about Ampleforth, and I was like, yeah, this is when you're looking for a suggestion that the coin is probably being overused and is going to experience a short-term correction, then yeah, look at the amount of the coin moving to exchanges. This was I think the second highest single-day inflow of Ampleforth to exchanges. Yeah, if you discount this spike in particular. So it suggested that a lot of people are using or are moving their Ampleforth to exchanges to sell. Therefore, additional sell-side pressure takes the price down. Currently, or in the past week, we've seen a normalization of Ampleforth's exchange inflow. It's still a bit high, but nothing too crazy. So, I mean, generally speaking, just a few metrics that I've been looking at. We can take a look at a few more. But generally speaking, I think daily active addresses are remaining at a decent enough level that I can't complain. Social volume is declining, exchange inflow is declining, so it seems like sell-side pressure is on the downside, and then the general sort of amount of interest in the coin is on the downside as well. Both of those can be a fairly promising signals for its short-term price action. Let's look at the amount of net profit loss. Okay, another sort of interesting metric to look into. So for those of you that don't know what this metric is, it's something that we've developed at Santiment. It's an experimental metric, so I would definitely take it with a grain of salt. It works better for some coins than for others. Net profit loss is a metric that tries to calculate the overall ROI of all daily transactions on the blockchain. So the way that it works is that for each unit of Ampleforth, in this case, that moves on the blockchain, we take the price at which it was last moved. So let's say that a bunch of Ampleforth was last moved here, and we assume that this was its acquisition price, $1, right? And then the next time it moves on the blockchain, we take the price at which it was moved then, and we assume that this was its sell price, right? Let's say 1.5. So the difference between those two prices, we combine all of those differences, and it becomes this chart. So essentially, when you see spikes in net profit loss, it means that at this point in time, all of the coins, Ampleforth coins moving on the blockchain on average are being moved at substantial profit relative to the last time they moved on the blockchain. So essentially, it suggests strong profit taking. And when those profit taking spikes happen during rallies, it probably suggests that a lot of people are exiting the coin and taking profits and getting home, right? Going home. So it's not surprising at all to see, I mean, we see it slightly here and here a lot around the short-term tops, and then we see massive spikes in profit taking before these corrections, right? And then on the other hand, we're also seeing sort of strong dips in net profit loss around local bottoms here, here, and here, suggesting sort of short-term holder capitulation. It basically means that at these points in time, coins that are moving on the blockchain on average are moving at a relative loss. So it's probably people that have bought here and here, or here basically at these upswings that are exiting the coin and taking their losses and getting out. Basically suggests that short-term holders are capitulating, paper hands are sort of moving out of the coin for the time being and probably allocating to long-term bulls. And this is why sometimes these dips in net profit loss can indicate short-term bottoms, because it basically what it means is that people that have got burned on the coin are now exiting. There's a lot of FUD. The coin is probably being oversold. So if there's enough people looking to buy the dip, this type of sell-side pressure is going to be absorbed, and it's going to sort of move into a short-term price recovery. Hope that makes sense. So recently, or over the past couple of days, there's been a sort of no significant moves on the, at least relative to this. We can zoom in to see exactly what it looks like. Yeah, fairly stagnant as far as net profit loss is concerned. So there's not sort of any sort of massive spikes in profit taking. There's also no massive spikes in massive dips in net profit loss, suggesting that nobody is really selling at a massive loss. The biggest one were here and here, obviously around local bottoms, where people were short-term holders were capitulating. I think this is also fairly good for the short-term action, is the fact that we're seeing a declining exchange inflow, so there's a declining sell-side pressure, and in general we're seeing people sort of stick to their guns for the time being. No sort of massive amount of profit taking in the short term. I wouldn't be like super bullish on AMPL, but from what I'm seeing, it's looking definitely healthier than it looked a week ago. I can put it that way. All right, we're already 5 minutes past the hour. Are there any other coins that we looked at? Thanks, Willem. Talk to you next week, yeah? All right. Right, before we maybe jump into the last coin, one big announcement, guys. Next week, we are going to be doing 3 webinars within 3 days. So it's going to be Tuesday, Wednesday, and Thursday. We're going to be announcing them, along the way on our social channels, Twitter, Telegram, Discord. We're basically going to be covering 3 interesting topics. Around, not this time, but 2 hours from now. So it's going to be 6 p.m. Central Eastern Time, Tuesday, Wednesday, and Thursday. The topics are going to be whales, and generally how you can analyze whale behavior on sand-based platform. That's going to be topic number 1. The second topic for the second webinar is going to be all about social metrics. So if you're still sort of not clear about how to use social volume, social sentiment, and other metrics for gauging crowd sentiment that you might not be aware of, it's going to be happening next week. And then the last webinar is going to be all about valuation metrics. So MVRV, NVT, and the best sort of tips and tricks that we can provide as far as how to use these metrics to figure out whether the coin is overvalued or undervalued, and also how to find potentially undervalued coins based on these metrics by using our screener. So if you're interested in any of those topics, join our Discord and join our Twitter, because we're going to be sharing links to the webinars as we go along. Obviously, it's all going to be on the YouTube. So, if you're just a YouTube subscriber, keep an eye on YouTube. If you're not a YouTube subscriber, make sure to subscribe, because 3 webinars are coming next week. And I think all 3 of them are going to be super interesting for people. All right. Anything else? There was one more coin that people mentioned, Brian. What was it?
Yeah, that was ALCX, ALCX.
ALC, sorry.
ALCX.
Okay, so, right, there we go. I don't know much about this coin. So, I mean, we can look at it a little bit. It's good to also look at the coins that you don't know nothing about. Because it's interesting to discover new coins and to kind of give a completely unbiased opinion on it. So it seems like, is it an ERC20? It is. Good. Okay, so at least we can see look at some of its metrics. Seems like it is 2.5 months old.
Is it the new token?
Yeah, it's 2.5 months old.
So it's still in its initial phase of redistribution, where whales are most likely holding bigger backs, right?
We're gonna look at its supply distribution.
I would say for any new token, there are 2 very good opportunities. Of course, if you bought cheap, yeah, but let's assume you're new to the token. So you want to look for the moment when the whales start offloading. Usually they do it either 2 or 3x, or they are concerned with something. And then you wait, because it will suppress the price for some time. And you try to buy the bottom. Yeah, typically, we have no other choice unless you was very early in the game. Just buying the tops and being hit by the wall of the selling It's unpleasant feeling. Yeah. You might panic at the bottom. It's much better approach if you try to trace and spot them selling, and then you buy. Yeah, so to say, you buy the APEX, but you buy it much cheaper.
Right.
Because it will go like 20 to 30% down. So let's see if whales already offloaded or not.
Let's see, indeed. So it's currently about $1,200. As far as its on-chain activity, it's actually quite impressive. I'm not gonna lie. But I mean, we've seen a few coins that probably wouldn't get this type of on-chain activity a few months ago, maybe 6 months ago. Now have, like you saw it a minute ago, there's 1,000 different assets with more than 200 daily active addresses over the last 7 days. That's a lot. Like usually it's those numbers are like in the low hundreds. So basically 100 to 200 different coins. So in general, it seems like overall there's a lot more interest in some ERC20s. The fact that ALCX is able to sort of maintain this level of around 800 active addresses for the last month and a half is pretty good. You know, not gonna lie, and especially given the fact that as its price has dropped, the amount of on-chain activity hasn't. In fact, it's actually risen a few times as well. Now, this could also be because of spike in deposits, maybe a little bit, yeah. It could suggest that some people are sort of exiting the coin for the time being. Let's see if there's anything on the exchange inflow that suggests that. Let's check it out here. Zoom in. Okay, I mean, yeah, a little bit of an uptick in exchange inflow during this sort of short-term bottom would suggest that people are starting to exit the coin a little bit as it corrects, suggesting, you know, short-term pains by ACLX holders. Definitely short-term pains according to this chart. So net profit loss, we're seeing big dips here and here around two bottoms for ACLX, basically suggesting that at this point in time, coins that are moving on the blockchain are moving a significant loss relative to when they were acquired or last moved on the blockchain. So it seems like some people were definitely looking to offload their bags, take their losses, and go home. So it might suggest that ALCX is a bit oversold and undervalued at the moment, given the fact that its on-chain activity is still relatively high as far as daily active addresses, but a lot of people seem to be, you know, there's a little bit of an uptick in exchange inflow and big dips in net profit loss, overall suggesting that people are selling and they're selling at a loss. Basically, there's blood on the streets, right? And sometimes it can be an opportune time. Doesn't necessarily have to mean anything, but it's definitely something to keep an eye out. So, okay, let's look at the whales for ALCX. Let's see what they're holding. I'm gonna plot the price of ALCX as well. I love it when people ask me about weird coins that I don't know much about. Just finding along the way what they do and how popular they are. All right, so we're gonna delete this chart. We're gonna take a look at the number of addresses holding a specific group of ALCX, and we're also going to look at the balance of those addresses. So let's start with, let's see how concentrated or distributed this coin is to begin with. So none of these. Oh, this is absolute. No, I want to look at percentages. Sorry, guys, just bear with me while I set it up. So this is probably 100, that's 1,000. This is 2 addresses. 2 addresses as well. 5 addresses. Okay, there's actually not a whole lot of addresses, a whole lot of whales. So interestingly enough, okay, so this is what I'm getting so far. There's between 100 addresses holding between 100,000 and 1 million ALCX currently hold about 81% of the the total supply. of this coin, right? Suggesting that it's fairly concentrated among the large holders. So it's gone from 96% to 81% now. Now, if you look at the amount of addresses that are actually holding this amount of money, this amount of ALCX, it's only 2. So it's probably, I would assume, team wallets, some sort of ecosystem wallets that are holding still the biggest share of supply. We can actually check it out exactly who they are. Let's look at top holders for ALCHEMIX. So these are the top 2 holders. I want to look at the top 2 holders, the top 10 holders right now. So this is the biggest. Oh, this is just a burn address. So are they burning a bunch of coins? What's happening? I don't know what their tokenomics are, so it's hard to say. And this is the second biggest address. So they've acquired 446,000 of this coin on during launch, I would assume, and then they dropped a little bit here at the, I guess at the sort of as it starts to bump, and since then they've just been kind of hanging on to this level of holdings. So it doesn't seem like they're ecosystem wallets. At least we don't have them labeled as such. That's why if you know what they are, you can go to hunters.santiment.net and you can provide labels for these addresses and get rewarded for it. Let's see what this address is. Okay, so whoever this is, I mean, I would definitely need to do some digging. We don't really have time for it, but I would need to do some digging to figure out exactly who these addresses are. Whether they are ecosystem wallets, whether they are whales, whether they are exchanges, because based on who this address is, it's very difficult. It's very different to know, whether this is an exchange increasing their basically more ALCX being moved to exchanges, which would be a bear signal, or whether this is like a big whale that is accumulating more and more, which would be a bullish signal, right? So the fact that we don't have it labeled as an exchange means that probably it's not. But I can't be 100% sure. So anyway, overall, this group is declining. And then on the other hand, we are seeing, let's see who's buying, right? Which group of holders is growing the most? Seems like small fish is all small traders or sort of retail size traders. If we zoom out, yeah, let's look at these first. Seems like they're relatively invested in the coin. Their percentages are growing of total supply held in these wallets. 1 to 10. So this is where we already get started with like mid-size holders, right? Let's zoom out of the token sale. Okay. So this group is interesting. Seems like they dumped at several tops, bought the dip here, bought the dip here, and bought the dip recently. I mean, assuming obviously that this is all accumulation patterns, but seems possible. Like their holdings increase here at the bottom, their holdings increase here, their holdings increase here, here, and here. And they have been sort of offloading during this correction as well. So, I mean, this is seems like an interesting group of holders to keep an eye on, 10 to 100. How many addresses hold between 10 and 100 of these? 83. Okay, so this is probably a group to keep an eye on. Seems like there are some very interesting sort of events with these addresses. I would then go into specifics of who these addresses are and find the whales that seemed, find whether the whales and how confident the whales are in the price action of this coin. And so the next group, 100 to 1,000 addresses, how many of them are there? Only 15. So these would already probably be some exchange wallets, maybe some very, very large whales. So I would take already this group, because it's so small, I would take it with a grain of salt. But assuming that they are whales, they're also sort of starting to accumulate. There also seem to be a few sort of dip buying events in their history, and offloading during this period. So yeah, it seems like whales haven't. Yeah, it seems like they've offloaded parts of their holdings here, and then now they might be moving back into the coin as it's correcting. So possibly a bullish signal. I don't want to like be 100% sure without going into the specific addresses and figuring out who they are. But overall, what I've seen about this coin is that it's got fairly solid fundamentals in terms of on-chain activity. There's been a lot of people sort of selling or selling at a loss around here, and we are seeing sort of large holders start to maybe accumulate back over the last couple of days as well. Although this is with a grain of salt without going into specific addresses and figuring out who they belong to. Not necessarily bad. I think it's got some potential to grow, although I can't be 100% sure. All right, we're 20 minutes past the hour, guys. That's gonna do it for me. And Brian, anything else before we go?
No other updates other than just a simple reminder to check out SANR and keep using your referral links, guys. We love that you're helping to spread the word, and we greatly appreciate all of your participation and continued attendance on these Friday calls. We absolutely love it, and I hope you guys are too.
So one thing before we go, there we go. Max is already ahead of me. There's a new discount code. It's spring. I'm already in the future. It's spring. So there's a lot of very interesting events that are going to be coming up, guys. If you're an Ethereum head, Uniswap v3, APE 1559, there's a lot of sort of interesting events, potentially market moving events and announcements going to happen, not just for Ethereum, but in general, sort of for the cryptocurrency ecosystem. So I think now is a very interesting time to be able to keep an eye on these metrics on a daily basis and also read our insights. Every day we publish something interesting that we find on the charts here on the insights bar. And every Friday, we also publish a weekly pro report, usually about Bitcoin or Ethereum, but sometimes about specific backtests that we've done on our metrics. I think they're very interesting and in general sort of can be quite insightful, especially if you're just starting with on-chain data. So for a limited time only about, I think this code expires May 14th, guys. So it's only 2 weeks, sort of a spring fling, sort of a discount code that we prepared. 40% off for your first billing cycle for Sandbase. It's only $49 a month anyway, so you can definitely see, getting it for even 40% less. I think it's a no-brainer. Sandbase is still one of, I think, the most affordable on-chain platforms out there. If you take a look at the sort of on-chain providers and on-chain ecosystem, I think the bang for the buck is definitely in our favor. 40% off for the next 2 weeks. Use the code SANSPRINGFLING. You can see it there on the screen during checkout, and you'll get almost 50% off. Well, okay, 40%.
Yeah, 40.
Go ahead, Brian.
Yeah, I was just going to say 40%. Pretty hefty discount.
I mean, I would take it. I don't know.
Yeah.
Okay, well, I would like to thank Mark Norman, for joining me during this call. Mark, thank you once again.
Always back to the comedy shows for me.
There we go. No, seriously, thank you, Brian, for everything that you prepared as well. Guys, hope you've found this interesting, found it insightful. If you want to talk to us more about the market, we're going to go back to our Discord channels, the general channel where we talk about stuff and answer community questions. And until then, talk to you in 7 days.
Thanks, Dino. Thanks, everyone.